What's up, everyone? It's Scotty with MoneyVest. So let's talk about Tesla stock. Tesla's been dealing with a lot of stuff recently as layoffs, as the US probe investigating into Tesla for a lot of different things related to FSD. The stock continues to pull back after the report from Beijing that they have approved the driver assistance program. It kind of gapped up to highs of well over 195, 197, and then since it has obviously sold off a little bit over 12% back down to 170s. So we're going to unpack everything in this video. We're going to go over a little bit of the technicals as well and go over, of course, what I'm planning to do. The game plan has not changed since my previous update. We'll be looking at selling some puts the moment it gets down to 150s. We'll be looking at selling some calls the moment it gets up to 200. So that is pretty much intact for Tesla moving forward. As always, if you enjoyed this video and find it helpful, make sure you drop a like and don't forget to subscribe to the channel. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us and of course getting access to all the members only private videos. There's over 50 videos that you can watch, including tutorials and educational videos on fundamental and technical analysis, as well as options trading, and also the 30 stock shopping list, as well as my buy targets, intrinsic values, and the MoneyVest index as well. So links going to be down below. So first things first, in Tesla Autopilot probe, the US prosecutors are focusing on securities and wire fraud as well. So this was obviously one of the catalysts that resulted in Tesla selling off a little bit over the last couple of days. So U.S. prosecutors are examining whether Tesla committed securities or wire fraud by misleading investors and consumers about its electric vehicle's self-driving capabilities. Three people familiar with the matter. And Tesla's Autopilot and full self-driving system assist with steering, braking, and lane changes, but are not fully autonomous. While Tesla has warned drivers to stay ready to take over driving, the Justice Department is examining the statements by Tesla and CEO Elon Musk suggesting that cars can drive themselves as well. So a little bit of that misleading information or advertising to some extent. But the thing is that they are working towards it, right? It's not like they're not working towards full self-driving or autonomous driving. It is something that they are working towards. And eventually, I think there's a very high probability, very high chance that Elon Musk and Tesla in general solves autonomy and is able to achieve full autonomous driving system where the cars are quite literally driving themselves, changing lanes, steering, all that stuff with a very, very high success rate and very low risk of accidents and safety measures are being taken place, right? So, of course, that was one of the reasons why the stock fell the way it did. This right here was the sell-off. Yesterday down about 1.7%, the day before down over 3.7%, and on the day right now, pretty much down about 1%, trading down to 172 at the moment. So Musk has also decided to lay off over 10% of Tesla's workforce, global workforce, in an effort to prepare for the next phase of growth. And this was Drew Baglino, who served as senior vice president at Powertrain. And Auto wrote Wednesday on LinkedIn that the recent layoffs that are rocking the company and its morale have thrown off the harmony. And it's hard to see the long game moving forward as well. So again, Tesla is doing a lot of cuts, a lot of layoffs. I think it's kind of completely dissolving its energy, renewable energy department, and of course, a lot of global workforce. 10% is a pretty big deal for a company that has hundreds of thousands of employees. But at the end of the day, it's really going to come down to the bottom line, right? So that's really what investors and in general the management is focused on, is profitability. Because as we looked at the earnings from the recent report from Tesla, the operating margins came down to 5.5%. That is, of course, a really, really low number. I think the lowest number we've seen in recent history over the last 6 to 8 quarters. And that is quite troublesome. I mean, profitability is struggling for Tesla. If you take a look on a quarter-over-quarter basis, you can see that we are coming down with very, very low margins now. 5.5% net margins, as you can see. So again, the future quarters, the expectations are, or the hope really is, that the company does not turn into a loss-making company, because that obviously would not be good news for Tesla. Because at the end of the day, like, we've gone from a loss-making company to profitability, and the last thing we really want to see is margins compressing to a point where now making a loss for Tesla. Now, BYD also has been a competition for Tesla, especially in China, and they're targeting overtaking Tesla as a top electric vehicle seller in Europe by 2030. So that's something to keep in mind, because competition is certainly heating up for Tesla, for a lot of electric vehicle sort of industry. BYD aims to topple Volkswagen, Tesla, and Stellantis and become the largest battery electric vehicle seller in Europe this decade. and European President Michael Xu and the Chinese carmaker planned a huge investment in factories, dealers, and marketing in the region to convince motorists to buy its electric and hybrid vehicles. And we are confident that we could build or be in a leading position before the end of the decade. And we are moving to the next stage to decide a huge investment in the EU that would be worth billions of euros as well. So more competition heating up over in Europe. And of course, Dan Ives from Wedbush mentioning or saying that China, in my opinion, is the heart and lungs of Tesla's growth story. And Elon Musk continues to play well in that sandbox in Beijing as well. So Tesla plans to test its robotaxis over in China. This was from yesterday or May 8th. So again, catalysts all back and forth, a little bit of a mixed bag here, some positive, some not so positive, and the stock's just been getting knocked around left and right, selling off from its highs of 190s back down in the 170s. Now, valuation wise, I mean, if you take a look at Tesla's expected earnings for this year, so if you just come take a look at earnings expectations here on an annual basis, we're looking at $2.43. And Tesla right now trading at 172 divided by $2.43 is trading at about 70 times earnings multiple, which is high, right? Which is high by every measure. It is a little bit on the higher side because last year they were looking at $3.12. So 172 divided by $3.12, we are closer to 55 times earnings. So earnings multiple going higher in the future is definitely suggestive that the growth rate is going down. Basically, there's a decline in earnings per share, even though the revenue expectations are pretty much flat. So we're moderating here from 96 to 99 billion, so just shy of $100 billion. So really what's happening here is margin compression. And that is probably one of the biggest reasons why the stock is selling off. It's not the FSD story. It's not the catalyst that I just went over. It's not the other stories that people are talking about on Twitter or on YouTube. At the core, at the bottom here is margins. Margins is really what's driving the price lower. You increase the operating margins and net margins to 10-15% in the coming quarters. Tesla, $200 plus, even $250, no problem, right? It would be much higher than where it is today. In my opinion, I would strongly believe that to be the case if margins were much better and profitability was higher. But because of the price cuts, because of the margin cuts, because of the fact that Tesla is almost on the verge of breaking even now on a quarter-over-quarter basis is the reason why Tesla is finding it very difficult, struggling right now to break out of certain resistance levels. And there's a huge supply, technically speaking, in the 200s, right? So $200, $203, very, very massive resistance. So really keeping it super simple. If Tesla comes down to 150, selling puts, I'm personally down in the 120s, 130s. Wouldn't mind adding a little bit more shares because if you do the math here, and we're looking at an earnings per share expected for, let's say this year of about $2.50, right? So 125 divided by 250, we are looking at a earnings multiple of about 50 times earnings. But of course, in the future years, the earnings expectations should accelerate, right? Right now, the expectations are, in my opinion, a little bit lower because 331 divided by 243, that's a growth rate of about 36%. That's going to be on a year-over-year basis, 36%. And then 444 divided by 331, we're looking at a growth rate of, again, 35.9, almost 36%. So right now the markets are expecting or pricing in for about 30 to 35% compounded annual growth rate in the coming years, which in my opinion, again, is a little bit more on the conservative side because expectations have really come down. But if they're able to achieve, let's say, 40 or 45 or 50% earnings growth, if they're able to solve autonomy, and of course, sell-through rates are much higher at lower priced models and margins accelerate, then of course, it can easily trade at a 40 to 45, even as high as 50 times earnings multiple. And again, 50 times multiple for, $3.50 or even as much as, let's say, $4 is going to put us roughly between $175 and $200 per share for Tesla, given those multiples. And right now it's at 172. And I think Professor Demodrin's fair value also sits somewhere around these levels. I have to go back and double check, but he's also done a valuation on Tesla accounting for a lot of different things. And I think he also sits somewhere around the 170s, 160s for Tesla in terms of its intrinsic value. So support level is going to stay put down here in the 150s. There's not really much for us to go over other than the fact that if it does end up trading down to these levels, we'll be looking at selling some puts. If it does, again, break out beyond 177, trades back up to 196, 197, I'll be looking at selling some calls once again and take some profits. It's basically free money because I did sell some calls last week and they were up 94%, was able to lock in just a little bit over $1,000. not a problem. That was good money. And if it, of course, trades back up higher to those levels, we'll be looking at selling calls once again. So hope you all enjoyed this video and found it helpful. This is the overall chart and the technical analysis where Tesla continues to struggle. Huge areas of supply in the 200s to as much as 290s. And support level is going to stay put valid here in the 140s and 150s for this company. As always, make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. And what do you think about Tesla? Are you buying, selling, or holding? And as always, happy investing. I'll see you all in the next video.